It's great to have you, Dan. Thanks for the time today.
Thank you for having me.
You know, everybody's trying to get a sense as to whether or not the EU has the nerve to pull the trigger on a robust ban of Russian energy. But I don't know. I wonder what you think. It seems like the split there is going to be hard to stitch.
Yeah, well, I think that they're going to come under increasing pressures as war drags on. That's not my area of expertise, but what I will say is, I've looked at this. Look at what happened when the U.S. banned Russian oil. The oil companies in the U.S. were already kind of self-sanctioning Russian oil, and we only import 300,000 barrels a day. We're talking about between 2.1 and 3 million barrels a day that Europe imports from Russia. This is 30% of their energy consumption, and I think if they pull the trigger on a ban, we're looking at $200 plus oil.
Yeah, that's going to be difficult. I mean, do you have much color to add on our ability to supply them with reliable LNG? Maybe not right away, but to get them through this coming winter and maybe the winter after that?
Well, we can definitely do it. I will say the administration has been sitting on six, or FERC, the Federal Energy Regulatory Commission, has been sitting on 6 LNG export permits, and speeding those up would certainly help. But we do have the capacity in the U.S. to, particularly with maybe 6 months or so of warning, to supply Europe with even more LNG. The U.S. is the Saudi Arabia of gas, so to speak, right? We have plenty of supply, but all this stuff takes a ramp-up period. All this stuff takes time, and right now we've got Germany, Italy, other European countries that are feeding Putin's war machine with billions of dollars a day in energy, in money for energy. And I think eventually that will stop as this war drags on. But that's going to be painful for everyone in Europe. And we'll see prices spike here in the U.S. too. We import about 20% of our crude. And I think we can quickly get back up to where we're energy independent, so to speak. But this is going to be a higher cost for everyone. And I think it's coming.
So with WTI right now at 112, 113 bucks a barrel, Dan, why aren't we already seeing that ramp up here in the U.S.? And we keep hearing it's a perfect storm. From your vantage point, why hasn't that production that output already started to move higher?
Well, I think the market is trying to test whether this is transitory, whether it's not. And there's a lot of, when the ducks paddling underwater, a lot of that, and it looks calm on the surface. There's a lot of that going on right now. People are scrambling to see what rigs are available in the fall. People are looking to ramp up production. But I think that, it's very easy to see the oil price on CNBC, right? And that moves pretty quickly. But in terms of adding rigs in the field and adding production, that takes a lot more time. The other thing is, look, as a service company, we're faced with the same constraints that all these other American businesses are. Time from China to get stuff is 6 weeks, not 3. Labor shortages, our fuel costs are spiking. Our insurance costs are spiking. So we have these same supply chain issues that everyone else does too right now.
Yeah. So in light of that, do you feel like this administration is working closely enough with the oil and gas sector here in the U.S. to be able to help, I guess, jump some of these hurdles?
Not at all. I mean, I would say the administration has been a complete headwind to the industry and trying to slow us down with death by 1,000 cuts until, maybe a few weeks ago. It's only 45 days ago Biden was calling on OPEC to produce more oil, not Texas or North Dakota or Oklahoma, which boggles my mind. But I think the administration is doing a complete 180 and really focused right now on trying to get in touch with the oil industry and become a tailwind and help us do this. But it's only been extremely recently. Their policies have not been helpful to us at all, really.